Hi, my name is Schuil. I am the co-founder and CEO of Safello, a Sweden-based Bitcoin brokerage serving the European market. Also the founder of Rhino Ventures, through which I've been investing in some ICOs and advising ICO candidates and investing in some cryptocurrencies.
All right, so Frank, I interviewed you over a year and a half ago. It was the 29th of January I've got written here, 2016.
Precise.
So I just want to do a quick recap from those previous questions. Is Safello still focused on the same core offering? If not, what's changed? What new offerings have you developed since we last spoke?
Yeah, so Safello, I think when we started was a brokerage. We moved into the business idea of creating essentially a new type of bank on top of blockchain, which was very ambitious, for which we didn't raise the capital that we needed to do that, and it was very early in the market. So over, I think, 2015, we were in the Barclays Accelerator. In 2016, we started really looking back at our core business, like what have we been doing, what are we good at, and going back to basics. And in extension of that, we started to improve our existing brokerage service, expanding credit card with credit card payments now for the European Union, MasterCard, Visa, and other types of payment methods. We've improved the entire front end. We created a whole new front end for the platform, and we acquired the first futures exchange in crypto. ICBit was it called when it was still operational, and we acquired the assets. And the CEO founder Alexei Bragin became our CTO.
Okay.
Yes.
So quite a bit's been happening.
We haven't sat still, and of course the market in 2017 has turned around quite a bit. So since September last year, after we acquired the platform, we've seen a pretty consistent growth in Safello.
What do you see as Safello's contribution to the industry as a whole?
Oh, that's a good question. I don't know, it's a saturated market, but I think our core mission has always been, since we started, to bring safety and compliance to an industry that wasn't driven by it. And I still think we stand for that today. Like most brokerages in Europe are not regulated by a financial authority. We are. Most of them haven't been audited by a financial authority or even the tax authorities. We've been audited by both. Most of them have not been able to establish good banking relationships and be that bridge between the traditional currency world and the crypto world. We have, both with our main bank here in Sweden as well as our deal with Barclays. So I think we fill the gap of sort of what is needed in order to get these two worlds closer together. And I hope going forward that we continue to be that bridge.
Okay. Last time we also touched on the block size debate. Are you happy with how that's unfolding?
So, I mean, we stood on the sidelines for the longest time on purpose, because effectively we are working with brokerages. We're a brokerage and we're working with external liquidity providers. So we wouldn't necessarily implement anything ourselves. So it would have been out of character to make a strong stance on either or in terms of the solutions of scaling. However, we have an investor, digital currency group, invested in us a couple of times, as well as Roger Ver, who are both spectrums of the side. And for us, it became apparent that there needed to be a scaling solution now. It's obvious that Ethereum has taken a lot of the momentum from Bitcoin in creating this whole ecosystem around it with ERC20 tokens. Now we'll have to see whether that is going to be turned around, and that we're actually going to see the same happening around Rootstock or the sidechains Lightning Network. But we supported the New York agreement driven by Barry Silbert, with the main objective to force something, because there was too much of a standoff for the longest time. Since 2015 we were talking about scaling. So I must say I'm very pleased. Like after years we had a breakthrough in getting a segregated witness activated. Now the second part of the New York agreement is still a question, whether that's going to A, happen, B, if it's going to happen the way people have envisioned it, and see if it's good for the market or not. So obviously you see Bitcoin Core that is looking to backtrack on well, they never supported the SegWit 2x, of course, but they're looking to continue to support the Bitcoin core as it is now and not support SegWit 2x or x2. What is it? It's 2x, right? So we'll see, right? So on the one hand, you have all these companies who signed the agreement. Some might now already withdrawing from it. That's not healthy. At the same time, I think it's very healthy that we had this breakthrough and we had Bitcoin Cash that came as a counter movement, which showed the world that, okay, hard fork can even work in Bitcoin. It is a big deal. It shouldn't be done lightly, but the fact that it happened, that it created two versions is perfectly fine in my book. And I predicted this as well, that it would play out like this, that it wouldn't be such a big deal. I think Ethereum was a great example of how it would likely play out. And so far, it seems like the exact same thing happened with Bitcoin. In terms of you have two versions, one is a fraction of the other, and wherever the core group is supporting it is the core developers, is the leading chain. And that's the risk with this split up between the segregated witness 2x and what Bitcoin Core as it is today, that might create more of a split up. So we'll see what happens next.
That's fine when we think about it from sort of inside the ecosystem, but what do you think people outside looking in are thinking about this? Because it doesn't look too good from the man in the street's perspective, who's maybe just sort of trying to understand and trying to approach it, and then sees
they got twice as many bitcoins for the same Bitcoin.
Do you think that's losing some sort of potential?
At the end of the so the question right now and still is, how much is the man on the street involved in Bitcoin and cryptocurrencies at all? We should not kid ourselves that it is a highly speculative market with a lot of people that are going for long-term investment. So to the extent that the man on the street is actually engaging with cryptocurrencies, it is a problem, right? It's a problem when a Coinbase essentially withholds people's Bitcoin Cash until they can launch it in January, for probably very good reasons. But the fact that you have money on a third party's account that you can't access is bad. And then the big question, like, okay, which version is the real Bitcoin, and not having clarity there. Now, I'm glad that it was resolved quickly, but in general, is it good for the perception of Bitcoin when you have a split in the protocol? No, it wasn't good for Ethereum either at the time. But in the long run, it is great that finally there was some kind of scaling, because any alternative would have been a lot worse for Bitcoin. If you look at the market share of Bitcoin versus the other cryptos, not the only reason, but a large part of the reason why it has lost market share, I do believe, is because it didn't get through that hurdle, over that hurdle.
Okay, and then just final question on the recap. Struggles with getting banked. How has that relationship developed both in Sweden and abroad?
So we've been banked now for 4 years with one of the top 4 banks.
Because the previous interview,
right.
I watched it again, and you mentioned how it was a drama and how you had your account switched off a number of times.
Yeah.
Since we last spoke.
About the UK accounts. So both the banks learn as well as we learn. We have implemented a whole lot more on avoiding any type of fraud. The reason that we have now credit cards live without any problem for months now is an indication of like both us as a company maturing, but also, of course, the bank maturing in their support of it. Still, I would say I can't walk up to any of the other top 4 banks and just say, hey, can I get a bank account? That still is not happening, right? But the perception of what this market is about has changed. So I wrote a blog post on my blog on Medium about how this narrative has changed. You had Cryptocurrencies, 2013, Bitcoin is bad, which is, if you look at the media, especially then in the Nordics, it was all about drugs, bad stuff happening, speculative bubble, what is this? And no one wanted to be associated with it. That changed into a narrative that was more reflective of what one could embrace as a financial institution, which was blockchain is great, and let's look at the efficiencies that we can achieve within a financial institution and how we can make this even more interesting on the non-financial use cases, or just on the legal use cases, smart contracts, and avoid this cryptocurrency stuff as a new monetary system. Where as of end of 2016, with the re-emergence, I think, of the price going up from Bitcoin, and now very much so with the whole ICO craze and the $166 billion market cap that we've entered now, that has turned around to the realization, also in part because the blockchain implementations at the financial institution side hasn't really shown any results. Like, yes, there have been a lot of proof of concept, a lot of money has been invested, but those timelines for financial institutions to implement a blockchain solution will take a lot of time, and it will come, but they sort of peaked on their hype cycle while the hype cycle of the cryptocurrency market has re-emerged. So the large institutions now realize that, hey, this might actually be something we need to watch. Not might, but this is something we need to watch. This is something that we need to embrace. And that goes not only for financial institutions, it also goes for central banks that are obviously experimenting, even governments. If you see, maybe not the best example, but if you see Russia investing $100 million, their strategic advisor, to do Bitcoin mining, and you see the SEC coming out with guidelines that are actually very savvy of understanding what's happening there and not limiting it and really shutting it down entirely. It shows that there is a clear understanding of what is happening, or at least how important it is, and that it's not just, oh, blockchain is great, cryptocurrencies are bad. The reality of that we might be moving to a new monetary system becomes more apparent. So if you listen to macro economists today, you would have them say a couple of years ago, or maybe even a year ago, cryptocurrencies is nothing. It doesn't have any intrinsic value, and it's not going to be anything. It's going to be shut down and made illegal. And of course, now with Japan legalizing it, and then India, Australia following the same trail, they've come to the realization, okay, cryptocurrencies are real, but governments will take over and they will create their own cryptocurrencies, which is a logical step to take. But I do think that a couple of years from now, they will take the last step in understanding public cryptocurrencies. If not leading, which I do think they will be leading as a sort of global reserve currency, but if not, they would still need to interact with those cryptocurrencies that are issued by central banks, which means that you're still talking about the same ecosystem.